The one thing that for everybody else to bear in mind is that these cycles tend to play out the same way. So it tends to start with crypto spring. Is Bitcoin dense? We then start transitioning later spring, and it seems to be always DeFi season. I don't know why, but DeFi season starts taking off. Then you start hitting alt season. When global liquidity starts increasing year on year, alt season hits and ETH starts outperforming Bitcoin. Also, NFTs lag. So we're kind of like we were beginning of last year in crypto, where some of the NFTs have found a base and are rallying. Obviously, some of those will go to zero, obviously. But that NFT space, it really takes off when ETH goes to all-time highs. That's what happened last time around. And then it utterly explodes because everyone's got money to recycle. They buy trophy assets. Everyone wants to buy a punk. And then off it goes again. 60% chance it's a regular cycle, somewhat like the last cycle, but maybe a bit more like the previous cycle, that 2017. I think there's a 20% chance that maybe it all gets front-loaded because we get all of the retail demand via the ETF, and it actually is a shorter cycle than expected. If you think the previous cycle was actually a bit stunted versus where people's expectations were, maybe this is stunted in terms of time. The other outcome I've got, the other 20% chance, is that this is a gigantic bubble cycle, somewhere between the 2012-13 version and the 2015, because everybody can now participate. Everybody was a little bit shocked that we didn't have a final leg last time around. So they now got that imprint, like they've all been waiting for the down 50% leg. So they're now all expecting that it to be a smaller cycle. And I always look for where can the crowd be wrong, but still be right, which is like it's going up, but it goes up more. My thesis remains unchanged. So I'm mainly denominated in Solana. Second is ETH. And like you, I think ETH has a big catch up as soon as this ETF is done. So that pause after the ETF is announced is, I think, the start of the ETH run. Because it's very simple. Let's say $1 billion of speculative capital went in to speculating on the Bitcoin ETF. Okay, once that news is out, you'll sell. Then what do? Oh, the ETH ETF, well, that's going to come by maybe June. So in which case that $1 billion goes into ETH. Now, what's interesting about ETH is it's a third of the size of Bitcoin currently. So if you put the same $1 billion into an asset that's a third of the size, it probably goes 3x more than Bitcoin did. And, you know, ETH with the deflationary asset, the more activity, the less ETH there is around, and all of the staking means there's not a lot of liquid ETH around if this happens. So it could get very, very squeezy. So yeah, I think that. And maybe at some point it'll play a bit of catch up to Solana. I think Solana beats it all cycle, but there'll be legs when ETH does really well, much like Bitcoin started off out of the gates faster than anything. Then Solana caught up and well exceeded it. I think ETH's chance is next. There are a lot of short-term traders in this space with a lot of capital, right? The main institutional capital in this space is actually trading firms. There's very few hedge funds, and there's very few big institutions. So these guys see that massive buildup in leverage. They wait for something, and then they press it and everyone gets liquidated and they make a ton of money from it. It's classic kind of market maker price action. It would have happened on the New York Stock Exchange floor, happens in the futures exchanges, it happens always. But the one thing, just before I came on today, I went back and looked at the 2015 to 18 bull market. We had 11 20% pullbacks or more. Many of them were 35, 38%. In the last cycle, from the 2020 low, not even the 2019 low, from the 2020 low, we had 8 corrections over 15%. Some happened in a day and some happened over 3 weeks. So it's normal. Another mantra that I have when you're in the middle of a bull market that has the macro behind it, it's just noise. And so, you know, has the main thesis changed? Is the world becoming less digital or more digital every day? More. Are investors who aren't exposed to it getting more interested in it? Yes. Is there capital flow coming in? Yes. Is the business cycle supportive? Are liquidity conditions supportive? Yes. In which everything else is noise. So it doesn't change anything. It actually gives it a higher probability of rising. And it gives it a higher probability of rising because you flushed out the leverage. So my forward-looking indicators of liquidity going up. The business cycle following that path. Inflation falling. Look at trueflation. It was down at 2 point whatever again. I still think it goes to zero. And then following it will be the core inflation will keep deflating. Unemployment, who knows? I think it rises a little bit from here. But that's enough to bring the Fed into action. Will they use the balance sheet and print? Well, somehow they got to roll all of this debt. Maybe they don't. Maybe they figure a different way. Maybe they incentivize the banks to take it on board. Doesn't matter. It's the liquidity that matters. So I don't see anything on the horizon that changes any of this. People are starting to feel confident again, right? And it took them a long time through 2023 to start to believe that the economy could recover. It was okay to be bullish again. And look, it's just the business cycle and that's normal. It took people a while. It took people a while to recover from, but my crypto went down 75%. I'm like, does this all the time? Also, look, most exchanges nowadays are higher quality and relatively safe, but if you can, you should not keep your coins on an exchange. That exposes other risks. So if price, last year was the best advert you wanted for an ETF to launch. If you'd have launched the ETF in November 2022, now, are the institutions going to use the ETF? Mostly not. It's mostly the RIAs. It's really for individual investors. So those pools of capital and the individuals, it makes it just super easy because they can just use their brokerage app or they can use their RIA because then they can get fees on top. So they're incentivized to do it. Will some pension funds do it? Yes, but they still really don't know how to deal with this asset class yet. And they want more regulatory clarity. I mean, it helps with an ETF. Don't use leverage. Don't overtrade. Just hold. Have patience. So, we've seen the work that, you've had Sandy on from Franklin Templeton. We've seen, obviously, the Fidelity team. These guys have been working throughout. People like Bitwise, Hunter Horsley, they've been out working all the way through the bear market, educating people, getting people in place, getting the right product, ramping up their teams. It's coming. If we'd gone in with such high funding, we'd have had to sell off after the event. Now we can have a rally and maybe a sideways consolidation before it actually goes live, right? So we've got announcement and then live date, and then the masses need to be mobilized. And so there's going to be waves of that happening. So my general mental model is we rally into it, rally after it,